All right, so are you ready to dive into some Indian banking? We're tackling Union Bank of India's latest financials today. Got their unaudited report statements for the quarter and a half year ending September 30, 2024. Plus a presentation they put together. We've got everything.
Wow, sounds like we're in for a treat.
And of course, I've got an expert here to help us break it all down, make sense of these numbers.
Happy to be here.
So what jumped out at you when you first saw all these documents?
Well, the first thing that caught my eye was that consolidated net profit.
Uh-huh.
It's up significantly for the half year.
Really? How much are we talking?
It's a pretty big jump, 8.39 crore rupees
Wow.
compared to 6.74 crore rupees the previous year.
Okay, so that is a significant increase. Is that a sudden thing, or is this part of a longer trend?
It's definitely part of a pattern. If we look back at the past few quarters, we see steady growth in both net profit and operating profit.
So overall, things are looking pretty good. Then I see a dip in profit back in March 2024. What happened there?
Ah, good catch. That dip was due to a one-time impact. It was a bipartite settlement for retirement benefits, basically a large payout related to employee retirements.
Okay, so it's important to keep that in mind when we look at the overall picture.
Exactly.
Gotcha. So a little blip, but not a sign of trouble.
Right.
Now, before we go too deep into all the details, can we just do a quick refresher on some of the key metrics?
Sure.
Like, what exactly is net interest margin?
Net interest margin, or NIM, is like the bread and butter for banks.
Okay.
It tells you how efficiently they're managing that spread between the interest they earn on loans and the interest they pay out on deposits.
Right.
So a healthy NIM means the bank is making a decent profit from its core lending activities.
So wider margin equals more money.
Pretty much. Think of it like this. If a bank charges you 8% interest on a loan, but only pays 3% interest on your savings account, that difference, that margin, is how they generate profit.
Okay, that makes sense. Another term I always hear is return on assets, or ROA. What's that all about?
So return on assets is another way to measure profitability, but this time it's about how well they're using their assets to generate profit.
Okay.
It tells you how much profit a bank is making from each rupee of assets it holds, like loans, investments, property.
Got it. So if ROA is high, they're using their resources well.
Exactly.
All right, let's zoom in on Union Bank of India's performance in some key areas. The report talks about impressive credit growth, especially in the RAM segment. Can you remind us what RAM stands for?
RAM stands for Retail Agriculture and MSME. Basically, loans given to individuals, farmers, and small to medium-sized businesses.
And why is this segment so important?
Well, RAM lending is really the backbone of the Indian economy.
Okay.
Think about it. Individual home buyers, they fuel the housing market. Farmers need loans for crops equipment. And those small and medium-sized businesses, they create jobs. So strong growth in RAM lending is a good sign for the economy.
Right, they're supporting the heart and soul of India's growth. What does the report tell us about Union Bank of India's performance in this area?
Their overall credit growth is solid 9.63% year on year.
Okay. But the RAM segment is really doing well at 12.31%.
Wow.
This suggests they're in a good position to benefit from the growing middle class and entrepreneurial spirit in India.
That's a smart move on their part, and it seems to be paying off. Now, the report also highlights a big jump in RAM lending over the past year. It's close to 1 trillion rupees. What types of loans are driving this growth?
It's a diverse mix. We see growth in home loans, vehicle loans, even education loans in the retail segment. The agriculture portfolio is mainly farm credit, which covers crop production and investments in agricultural infrastructure. And for MSMEs, they're providing loans to help them expand, create jobs.
Wow, so they really are supporting everyone from families to farmers to entrepreneurs. Now, of course, to give out loans, they need deposits. How are they doing on that front?
Deposit growth has also been healthy, 9.17% year on year. This includes an increase in traditional deposits, other liabilities, and what are called provisions.
Hold on, provisions, don't those have something to do with bad loans?
You got it. Provisions are essentially funds that banks set aside to cover potential losses. It's like a rainy day fund.
Exactly. It's a way for them to be prepared for unexpected losses, ensure they can cover potential bad loans or other financial hiccups.
So it's a safety net.
Precisely. And while some provisions relate to bad loans, others are for more general contingencies. In this case, the increase in provisions likely reflects a prudent approach to risk management.
Makes sense.
Yeah.
So it's a good sign that both credit and deposits are growing steadily. Now let's talk about something that I know everyone's concerned about, asset quality. What's the story with Union Bank of India's non-performing assets?
You're talking about NPAs.
Yes, NPAs. Can you remind me what those are? Why should we care?
NPAs are basically loans that have gone bad. The borrower has stopped making payments. These NPAs represent a potential loss for the bank, so we want to see those numbers going down.
Right. Fewer bad loans means the bank is doing a better job of managing risk. So what's the good news?
Here's the interesting part. Both gross APAs and net NPAs have been decreasing steadily over the past year.
Hold on. What's the difference between gross and net NPAs?
Sure, gross NPAs represent the total value of those bad loans, while net NPAs take into account the provisions the bank has set aside to cover potential losses.
Okay.
So a lower net NPA generally indicates the bank has a better handle on its bad loans and has already accounted for some of those potential losses.
So it's like they're cleaning up their act.
Precisely. Since September 2022, the bank's gross NPA has decreased by 24.892 crore rupees.
Wow.
It suggests they're doing a good job managing risk, improving the quality of their loans.
A 24 crore drop. That's impressive. What led to such a dramatic improvement?
Likely a combination of factors. Maybe improved loan recovery efforts, borrowers getting back on track with their payments, or even the bank selling off some of those bad loans.
Okay.
Whatever the strategies, the key is that their asset quality has improved.
Definitely reassuring. So they're making solid profits, their lending is growing, especially in key areas like RAM, and they're getting a handle on those risky loans.
Yeah.
Now there's one more metric I know is important, capital adequacy. Can you explain what that means in simple terms?
Capital adequacy is like the bank's safety net, making sure they have enough cushion to absorb losses, keep operating even during tough times.
So like a financial buffer.
Exactly. It's about having enough capital to cover potential losses without going bankrupt. Regulators set minimum capital adequacy requirements for banks to ensure stability. And guess what? Union Bank of India is exceeding those requirements.
That's great. What are their numbers in this area?
They have a strong capital adequacy ratio, or CRAR, of 17.13%. Their CET1 ratio, which focuses on the highest quality capital, is at 13.88%.
So they're well prepared to weather any storms. That's reassuring for anyone banking with them or investing in their stock.
Right.
Now, I know these reports are full of interesting details. What are some of the more intriguing things you found?
Well, one thing I noticed is this mention of provisions for unhedged foreign currency exposure.
Unhedged foreign currency exposure. That sounds risky.
It suggests they have some international activities transactions in foreign currencies. Unhedged means they haven't taken steps to fully protect themselves against potential fluctuations in those exchange rates.
Okay.
Now, a certain level of foreign currency exposure is normal, and the provisions indicate they're aware of the risks. But it's something to keep an eye on, especially with today's volatile global markets.
Duly noted. What else did you find?
Well, there's a line item about a 1.06 crore penalty they had to pay to the RBI.
RBI.
The Reserve Bank of India's central bank.
Mm.
Makes you wonder what happened there.
A little banking mystery. The report doesn't give any more details, does it?
Not really. We'd have to dig deeper to get the full story. But it's a reminder that banks have strict regulations. Even minor slip-ups can result in penalties. It shows the importance of compliance.
Absolutely. Even with all the good news, it's important to remember there's always more to the story. Speaking of which, there's one more detail you mentioned that I want to hear more about: fraud.
Yes. The report mentions 159 cases of fraud totaling 11,165.83 crore.
Whoa, over 1,000 crore rupees lost to fraud. That's a huge number. What kind of fraud are we talking about here?
The report doesn't say much. It just says the frauds are fully provided for, meaning they've set aside enough money to cover those losses.
Okay, so at least they've accounted for it. But that's still a lot of fraud cases. Makes you think about their security measures.
Absolutely. It raises questions about their risk management and fraud prevention strategies.
Well, we've uncovered a lot already. Solid profits, impressive growth in lending, improving asset quality, strong capital reserves. But we need to consider the bigger picture.
Right.
How does Union Bank of India compare to its competitors? And what can their performance tell us about the Indian economy? Let's dive into those questions next.
Sounds good. So yeah, picking up where we left off, it's important to compare Union Bank of India to other banks.
Right, like how do they stack up against the competition?
Exactly. Looking at the whole Indian banking landscape helps us understand their strengths and weaknesses.
Okay, so let's do a little bank versus bank. What are some of the big competitors, and what should we be comparing?
When you're looking at bank performance, there are a few key things that really matter.
Okay.
We talked about net interest margin, return on assets.
Right.
But we also need to look at those non-performing assets, those NPAs.
Uh-huh.
Comparing those ratios across different banks tells you a lot about how well they're managing risk.
Yeah, because a bank can look good at first glance, But if they have tons of bad loans, that's a problem.
Exactly.
So who are Union Bank of India's main rivals? Who are we comparing them to?
In the public sector banking space, some of the big players are State Bank of India.
SBI?
Yeah, SBI Punjab National Bank or PNB Bank of Baroda Canara Bank.
So the big names.
Yeah, these are all large, well-established banks all over India.
Okay, so how does Union Bank of India measure up against these guys?
To really get the full picture, we'd need to dig deep into each bank's financials.
Right.
But from what we have here, Union Bank of India seems to be doing pretty well. Their net profit growth, especially lately, is impressive. They're even doing better than some of the bigger banks.
So not just keeping up, they're actually beating some of the big guys.
Yeah, in certain areas.
Impressive. What about those NPAs? How do their bad loan ratios look compared to the others?
Their declining NPA ratios are a good sign. They're likely doing better than some of their peers in this regard.
Okay.
The whole Indian banking sector has had a lot of NPAs for a while now.
Right.
So any bank showing improvement here is worth watching.
So it sounds like they're managing risk effectively, which is good for their long-term stability.
Definitely.
Now, you mentioned we'd need more information for a complete analysis.
Yeah.
But is there anything else in Union Bank of India's reports that hints at their competitive advantage? What makes them stand out?
One thing they're focusing on is financial inclusion.
Okay.
They're expanding into rural and semi-urban areas, giving financial services to people who haven't had them before.
So reaching those underserved communities.
Exactly. And this aligns with what the Indian government wants to do, bring banking to everyone.
So they're not just focused on profits. They're helping with social and economic development.
Right. It's a win-win.
What are some examples of how they're promoting financial inclusion?
They've been setting up special branches, like those Union MSME First branches we discussed. These branches cater to small businesses. They're also expanding their network of business correspondents who connect the bank with customers in remote areas.
Okay.
And they're using digital platforms to make banking easier for people who can't get to traditional branches.
So they're blending physical branches with technology. That's a smart way to reach more people.
Definitely. It allows them to reach a wider customer base, contribute to economic growth.
Now, earlier we talked about their international operations.
Yes.
Aside from those provisions for foreign currency exposure, what are their global ambitions?
Well, they have branches in Dubai and Sydney and a banking subsidiary in London.
London. Wow, that's a big financial center.
It is.
What are they doing there? Are they serving the Indian community or competing in the UK market?
That's a great question. Unfortunately, these reports don't give much detail about their international business. We'd need to look at their annual report or other public information to understand their global strategy.
So there's more to uncover there.
Definitely.
But having a presence in these key global spots suggests they're thinking beyond India.
Expanding internationally can be a smart way to grow and diversify.
Exactly. It can also help them become less dependent on any single economy.
Right.
Of course, global expansion comes with challenges and risks, but that's for another time.
Agreed. We've covered a lot today. Union Bank of India's strong financials, their focus on RAM lending and financial inclusion, and even a glimpse of their global plans.
Yeah, it's fascinating how it all fits together to show the bank's strategy.
You're right. Financial statements tell a story.
They do.
And in Union Bank of India's case, it's a story of growth, resilience, and commitment to both profit and social impact.
Very well said. It's a story I want to keep following. But before we wrap up this deep dive, there's one thing from the reports that I want to talk about. That RBI penalty.
Ah, yes, that penalty. It's definitely intriguing.
It is.
The report doesn't say much about it.
Right.
It just says they were penalized 1.06 crore, which isn't huge compared to their profits.
True. It's not a major hit, but it still makes you wonder, what did they do to get penalized?
It's hard to say for sure. The RBI has a ton of regulations that banks need to follow.
Right.
Everything from capital adequacy to anti-money laundering to lending practices.
So it could be anything.
It could be a breach in any of those areas.
A regulatory puzzle. I want to know more, but it looks like we'll have to do some detective work.
Some internet sleuthing might be in order.
Sounds like a plan. Well, it seems like every deep dive leads to more questions.
It's true.
And that's what makes this so interesting.
Absolutely. The more you learn, the more you realize there is to know.
Well said. Now we've got that RBI penalty on our minds. Let's take a little break and see what we can find out. Then we'll come back and try to solve this mystery. All right, so we were talking about that RBI penalty, remember?
Yeah, that was interesting.
I did some digging online, found some news articles.
Oh, really?
Yeah. And it turns out the penalty was for some issues with regulatory compliance, specifically KYC norms and anti-money laundering regulations.
KYC and AML. Huh, those are pretty important.
Yeah, KYC stands for Know Your Customer, and AML is anti-money laundering.
Right, those are crucial for banks. They're designed to prevent financial crimes, like money laundering, terrorist financing, identity theft.
Yeah, it's all about making sure banks aren't helping criminals move money around.
Exactly.
So what did Union Bank of India do wrong? The articles I found weren't very specific.
Well, it's hard to say without knowing the details of this case, but we can talk about some common violations.
Okay.
Sometimes banks don't do enough due diligence when they get new customers.
Okay.
They don't verify identities carefully enough or assess the risk of a customer or a transaction. Other times, they might not update customer information regularly, or they miss red flags that should trigger an investigation.
So maybe there were some gaps in their procedures,
It's possible.
but they did get penalized and they addressed the issue.
Right, and they publicly disclose this information in their reports,
Oh?
which suggests they're trying to be transparent and improve their compliance.
So not ideal, but not necessarily a sign of major problems either.
Yeah, I think that's a fair assessment.
Do you think this penalty hurts their overall positive performance?
Any regulatory penalty is serious, of course. It shows their controls and processes weren't good enough.
Right.
But regulations change all the time, and banks are always trying to adapt and improve. So this penalty might be a bump in the road, but it could also lead to positive changes.
Makes sense. It's a reminder that even a good bank needs to be careful and stay up to date with the rules. So looking ahead, what should Union Bank of India do to prevent this from happening again?
They need to review and strengthen their KYC and AML frameworks, maybe implement better monitoring systems, invest in staff training, create a stronger culture of compliance.
Sounds like a lot of work.
It is, but it's important for maintaining trust and stability in the financial system.
Absolutely. Now, before we wrap up, I want to go back to something you said about financial statements telling a story.
Yeah.
We've looked at a lot of aspects of Union Bank of India's performance and strategy.
Mhm.
What's the big takeaway for you? What's the story here?
I think the story is one of resilience and adaptation.
Okay.
They're operating in a tough environment, lots of competition, changing regulations, the risk of fraud. But they're also showing strengths, good profitability, focus on growth areas like RAM, lending a commitment to financial inclusion. It's a story of progress with a few challenges along the way.
It's like that. We've seen their good points, found some things they can improve on, and gotten a glimpse of their plans for the future. And it leaves us wanting more.
Definitely. I'm curious to see what happens next for them.
Me too. Well, I think we've covered it all. I think we've squeezed every last drop of insight out of these financial statements. Until next time, keep those brains working and that curiosity alive. Happy deep diving.